Okay, good afternoon, everyone. Um, can you hear me? I believe you can. Can you hear me? Can you see me on the screen? Okay, I think we just get started. I believe audible. All right, I want to welcome everyone to this training. We had a first session on Monday by my other colleague, Michael. All right, thank you. Because we seem to have, I seem to have a very quiet audience. Thanks for the person that responded now. So this afternoon, we're going to be looking at news trading strategies. Now, the essence of this is to teach us how to trade news. One of the good ways to trade the forex market is actually to trade fundamental events. Yes, I agree. Sometimes it can have its up and down, especially for newbie traders. Thank you, Mr. Emmanuel. Thank you for that, for the response. So like I said, it may have its up and down for newbie traders, and that's why we're here to guide you on how to trade news or how to trade fundamental events generally. So we're going to look at fundamental and news trading strategies. There are different strategies you can use to make money, or to be profitable rather with news trading. And the first of it is to trade, with a higher time frame as directional bias. Now, if you've been a part of our analysis session, if you watch how I do analysis, especially when it comes to news trading, the first thing is that I go to Forex Factory, we'll look at the event, we'll look at whether the actual is greater than forecast or less than forecast. We'll analyze all that. Then I normally now go to the charts, where I look at the currency pairs, concerned with that upcoming news event. And I look at, directional bias on the technicals, checking out the technical analysis ahead of the news. Now, generally, on the higher time frame, the market signals can be clearer on the higher time frame, like daily time frame, weekly time frame, or even the multi time frame. So most of the time, price often goes in the long-term direction, which is the direction of those higher time frame. So using the technicals as a bias, it works a lot. I've seen it work a lot. At the Lagos office yesterday, we had a physical class, and someone came to the class and was telling me how he had followed how we do analysis, especially when we do fundamental analysis and we merge it with technicals and we give a forecast. Okay, this is the direction this news will likely come out, and it happens exactly like that. The simple way we do this is to look at the technical bias, as a directional bias ahead of the release of the fundamental event. And I tell you that it works a lot. It works a lot. We've seen this happen. There was an analysis I gave on Monday, about the AUD, and I said I expected AUD USD to crash because technically I saw a bearish bias, but that when the news on CPI from Australia is released on Wednesday morning, that night in Nigerian time, that should trigger the bearish direction. And it happened exactly like that. If you check your chart now, you discover that news was released last night. And the AUD USD, even AUD JPY, virtually all the AUD pairs went in line with that direction because that is what the technicals, is saying on the higher time frame. So this is one potent way to trade the news, looking at the technicals on a higher time frame to get a directional bias. Now, the second way to trade news is to use support and resistance and other key levels still on the higher time frame. Here we're not looking at scalping. No, we're looking at the higher time frame to give us, direction. Now, so why do we use support and resistance? Now, generally, we know that a resistance level or resistance zone is a seller zone. Looking at the diagram on the screen now, this is a resistance zone, meaning when price gets to the resistance, we expect price to crash downwards. So we have the resistance zone as a seller's zone. Now, if price is around a resistance level as at the time a news is to be released, then most likely, except for a few occasions when we can't say 100% it must, but most of the time when you have price resting on a resistance level as at the time a news event will be released, most likely the price will always come in the bearish direction. I've seen this work many times. It's what I've back tested and I've used for analysis, uh, so many times, and I've seen that it works. Also, if price is at the support level before a news release, most of the time the news will come out, actual will come out to favor, to be greater than the forecast, to favor a bullish breakout on price at that instance. You can try this in any upcoming news. Now, what I personally do is that if, for example, there's going to be a news from the United States, USD news, all I do is that I scan the major currency pairs, look at USD USD CHF, or USD CAD, and look firstly, if is there any one of them on a resistance level or a support level. So if, for example, I found that any one of those pairs, it may not be all of them. I only pick the perfect one out of all of them. So if I find that maybe USD is at a resistance, at a support level, I'll take note of that. If another one too lines up with that same pattern, perfect. But if it's only one, that's the one I'll look at. And I get my bias from there, and I wait the outcome of the news. And I tell you that most of the time, it goes in line of that support or resistance. So we can use this to filter our news to get a perfect direction when we want to trade news. How do we get support and resistance levels? Okay, we might go on the chart later on. I'll show you that, but let's just write on. I'll definitely come back to that. All right, so the third way to trade news is through previous day candlesticks. And this is equally very important. This strategies here may look, for some people who are newbies, they may need to catch up on a lot of things to trade this way. But I tell you, once you are able to get how this works, it makes news trading, a very, very easy thing for you to do. You can do it at your own convenience without, having anyone give you any form of support or the other. So using previous day candlestick is another important feature when it comes to news trading. So if you understand candlestick pattern, this will work a lot to your advantage. For example, in the scenario, excuse me, in the scenario we're seeing here, we have a candlestick that looks a little bit like a rejection candle. Now here, the shadow is facing downwards, meaning that we expect a bullish movement because, the buyers were able to push the price up in the previous day. So if a news is going to be released today, there's a strong likelihood that the news may go in the bullish direction. Now, when we say previous day, that means we're looking at the daily time frame. I tell you that everything I've mentioned so far, looking at the trend, looking at support and resistance, at the previous day candlestick, it's all about trading on higher time frame, looking at the higher time frame, daily time frame, or weekly time. It's very important. This is not to be done on time frame like 4 hour or 1 hour or 15 minutes. No, we are looking at the big picture. And the reason is because the market always goes in the direction of the long term. That is very, very important. It's key for you to know that. So if there's a trend on the daily time frame or weekly time frame, it means that trend can be sustained for several weeks or even months to come. And most fundamental events that are released will go in that direction, except for few occasions where it may vary. But generally, the news fundamental events always go in the long-term direction, of the trend. So we can always look at, the previous day candlestick. It can also help us, to trade. Let's say, for example, this was a perfect doji. It will have been, a bullish trade also. At least take note of that. That gives you a directional bias in mind. That's why when I do my analysis, I'll tell you that I'm bullish bias on this instrument pending the outcome of the news. So I take a direction in mind, looking at what the technicals is saying. and wait for the outcome to be released. And if the outcome is released in the line of my technical bias, I trigger my trade. So that's how we do it with fundamental events. And another strategy to use is now this one is now a lower time frame with higher time frame alignment. Here we're doing more of multi-time frame analysis, looking at trend on the lower time frame, matching it with the higher time frame, and using that information to trade. For example, now on the chart you're seeing on the screen, you can see the trend on the 15 minutes time frame is a bearish trend. The trend on the 1 hour time frame is bullish. Trend on 4 hour time frame is bullish. Trend on daily time frame is bullish. So obviously this 15-minute time frame will just be used for entry. All the other time frame from 1 hour to 4 hour to daily, they are all bullish. So all we need to now do is to wait for the 15 minutes to align with the higher time frames, and you can trigger your trade, in the bullish direction. This is also a strategy that some people use to trade news. So when the news is released and you watch, you have a bias on the previous 1 hour, 4 hour daily. In this case, is bullish. So if the news comes out to favor that instrument, in which case you're expecting it to buy, but initially, probably the 15 minutes is bearish. The candlestick maybe is bearish before the release of the news. Once it gets bullish in line with the other time frames, you can trigger your trade, in the bullish direction. Now, another one is to place instant execution if price is according to your directional bias. So let's say from the first strategy here, we'll look at directional bias. In this diagram here, the market is in an uptrend. So if the actual comes out greater than the forecast, we actually expect the price, to go in the bullish direction. So in that instance, all you need to do is that if the news is now released and the actual actually comes out greater than the forecast, you can trigger, a buy trade in the direction of that, trend that we saw. So you can place instant execution if price is according to your directional bias. And sometimes some people even do this ahead of the release of the news because they have a directional bias already before the news is released. They place a buy. Though personally, I really don't encourage that. I want to see the actual being released. It's just been trying to play safe. But if it works for you, well, that's maybe your style. Just make sure you're trading all the time in the direction of a long-term bias. It's very important. Another strategy is to place a stop order if you notice a trend reversal. Now, there are pending orders, on the trading platform. You can see the diagram there. You have the buy limit, sell limit, buy stop, or sell stop. Now, in this instance, what you're trying to do by placing a stop order is if you have a directional bias, let's look at the previous diagram. If you have a directional bias here being bullish, you can do a buy stop order, in which case you believe price will go higher. So you place, let's assume you place a buy stop that when price, when the news is released, the price could go and trigger, your buy stop order in this case, which is the entry being above the current price, and your trade can get triggered. That is a possibility. Now, the other possibility in this case is that you can also do a buy limit order. Now, what is a buy limit order? For a buy stop order, the entry price is always above, the current market price. While for a buy limit order, the entry price is always below, the market price. So if you have a scenario in which maybe a news is released with a spike, and instead of buying, the news first starts selling, but because you have a bullish directional bias, you can do a buy limit, meaning you expect price to first hit, the limit order, the buy limit, then from there goes in the bullish direction. So that is equally a way to trade the news, trading the reversal, which could lead into the, normal direction where you expect the price to still go eventually. And it's important that you apply proper risk management when trading. Now, one of the things people do when trading news is to pump in, so many trades. Sometimes some news may come out not in the way you really expect. Things may go the other side, and if you are over trading, you can actually put your account at a risk. Also, when you're trading news, if you trade with too high leverage and things don't go as planned, you may also put your account at risk. So it's important to always manage your risk at all times, whether you're trading news or you're trading just pure technicals. It's important that you apply proper risk management at all times as a trader. And it's also one of the ways to manage risk is also you can by applying proper risk to reward ratio. Now, this is very important because it's one thing to enter a trade, it's another thing to place the right stop loss, because the volatility of news can be so much that sometimes if care is not taken, your stop loss will get hit if you don't, apply it in the proper way. So how do you do your risk reward ratio in trading? There are examples on the table you are seeing on the screen right now. In this instance here, we have a scenario of risk reward ratio of 5-1, meaning you're willing to risk 1 and make profit times 5 of the risk you're willing to take. What that means is that, for example, you're willing to risk $20 in order to make a $100 return. So that's just so you must have a reasonable profit level, way higher than the amount you are willing to risk. It's like saying you're willing to risk $100 in order to make $500. So that's how you do, your risk reward ratio. So here you can see risk reward ratio 5-1. Here, risk reward ratio 1%, same target but better risk reward. If both trades use 1%, first trade at 1.5.2 risk reward, second trade at 5%. So just always make sure your reward is always higher than your risk, either risk reward of 1 to 5 or 1 to 3. Just make sure it's really, really reasonable enough so that even if there's a loss on some trades, the profit on the other side will cover up for the losses and you're still profitable at the end of the day. Now, another strategy that people use to trade news is called the straddle strategy. And this involves placing a pending stop order above and below your support and resistance zones. This strategy is also known as a breakout strategy. So this one is a very common strategy that people use to trade news, straddle strategy. What it involves is that before the news is released, you find a support or resistance zone and you place a pending order, a buy stop and sell stop simultaneously. So the idea is that you don't know that you are, in this case, you don't have a directional bias in mind. You just want to wait for the market to break out on its own. So if it breaks out upwards, the buy stop order gets triggered. If it breaks out downwards, the sell stop order gets triggered. However, it should be used with caution because there are some news events, where price could break out, could have a spike, which could lead to both the buy stop and the sell stop order being triggered. And that's why you need to practice risk management at all times. We don't control the market, nobody does. So you don't know how volatile the market will be, whether it's going to trigger both your buy stop or your sell stop at the same time. So trade it with a lot of caution. So this is how the straddle works. You can see identify a support zone or a resistance zone just some few minutes before the news is released. You have the buy stop order, the sell stop, then you have your stop loss on both sides. And for the buy stop, you have the take profit above. For the sell stop, you have the take profit below, and you wait for the news to be released. In this instance, the news got released and it went in the bullish direction, and the price was able to hit profit. All right, the last we'll look at is called the post-news trading strategy. And this involves trading according to the news released data from a reliable news website. I think this should have been done. That's looking at the forexfactory.com to look at the released data, the forecast and the actual. And that's actually the primary and the elementary way of trading news. You look at the data, you look at the forecast, you look at actual. When the actual is greater than forecast, that tells you you're going to buy, the instrument, whether it's a dollar or pound or euro or anyone. And if the actual is less than forecast, that means you're going to sell. It's one of the most straightforward ways to trade news in the Forex market. Okay, I think I've already said that, how to trade. If the actual data released is less than the value of the forecasted, of the data forecasted, this means the value of the economy is weak. Hence, it's a bad indication to sell such currency if it is a base currency and buy such currency if it's a quote. The color on the Forex Factory interface will be written in red using USD as a case study. So if the actual is less than forecast, you sell the dollar if it's a dollar news. If the actual is greater than forecast, you buy the dollar. So if you're trading a news where, let's say CPI, for example, on the United States dollar, the actual is greater than forecast, it means you're buying the dollar, in which case you can buy USD JPY, USD CHF, or USD CAD. And if the actual is less than forecast, it means you're selling also USD JPY, USD CHF, or USD CAD. All right, that will be all. It's a short training, but very loaded. And I'll just do a little recap again. The first one we mentioned is trading in line with the long-term bias, higher time frame directional bias. It's very important. If you have trade going in a bullish direction, when you're trading your news, just all you need to do is look out for a news in line with that bias. If you are in an uptrend, sorry, the currency you're looking at is in an uptrend on the daily time frame, then you are waiting for a news where the actual is greater than forecast to trigger a buy trade. It's just as simple as that. So what if the news comes out actual less than forecast? Well, you may choose to ignore it because that instrument is in the bullish direction, not the bearish direction. It's safer that way to stick, with the trend. We have this cliché in technical analysis that the trend is your friend. So always trade with the trend. And the second one we look at is trading with the support and resistance. So it means if price is at a resistance level, you are looking for a news where the actual is less than forecast to trigger a sell. And the third strategy is trading with a previous day candlestick pattern or any major candlestick pattern, around at that period will be a guide as to where the market is going. And we'll also look at trading with a multi-time frame analysis, looking at trend on different time frame and trading in line with that. And we said that you can place instant execution once the trade, comes out, once the news comes out in line with your directional bias. All right, I think that should be all. Then also you can do pending order, for your news before it is released. All right, so that's all I have for us this afternoon. I will take questions in a minute, but then before then, somebody was asking how to identify resistance and support level as a way to trade news. I will just take that in a few minutes. Then I will entertain other questions that we may have. So I'm trying to open my MT4 now. Then I'll switch over to MT4. I will look at support and resistance. Okay, my MT4 is loading. If you have a question now while we're waiting for the MT4, you can either type it in the chat box or you can unmute your microphone and ask, and I'm here to answer you.
Yeah, good afternoon. Thank you so much.
Sir. You're welcome, sir.
Yeah. Okay, so thank you for your presentation. What I deduce from what you're saying is the actual and the actual result of the news will eventually validate your bias. So it doesn't matter what your bias is. It doesn't matter what your bias is. You still have. So, okay, my question is, what is superior? Is it your initial bias based on the trends, or the forecast and the actual that has been released? For example, you said if a trade is on a resistance and the actual is less than the forecast, they are both in alignment. So you sell that currency. Okay. So if the actual is greater than the forecast and it's on a resistance, from what you said, we should ignore the news information and then go with the trends based on the higher time frame. Am I correct?
Yes, you are.
So my question now is the higher time frame overrides the news information that has been given to you.
Yeah, I didn't say it overrides it. I didn't, let me explain what I'm saying now. Now, flipping over uh to MT4. Can you see my MT4 screen now?
Yes, sir.
All right. Now, if you, I don't know if you joined my analysis on Monday when I was giving the weekly outlook.
Yes, yes, I was there, sir.
Good. Now, I said, I even did a video on this, on what I'm about to say now. I did a special video on the dollar, on the US, the dollar index, USD CHF, AED USD, and Euro USD. And I said in that video that for the AED USD, I have a bearish outlook because of two reasons. One, now this is AED USD on the daily time frame. Earlier, we have price hit a resistance zone, okay? And that was, as a last week, we have, this is today, Wednesday, this is Wednesday, Tuesday, and this is Monday. Now, last week, last week, Thursday candle closed as a rejection candle. It closed as a rejection candle, which hit, that resistance zone. Now, we have a resistance, we have a rejection candle. Those are two things that tells me that we should get ready for a bearish movement on this, instrument for this week. And the other way that will happen also is if any fundamental event on that instrument comes out, in such a way that the actual is less than the forecast. Sorry, some people are trying to log in. They're having difficulty. Let me pay attention to them. Try connecting again. Okay, so I'm back now. All right. So I said I am looking out for a bearish bias on AUD USD this week. I said I'm bullish on the dollar, I'm bearish on AUD USD, and Euro USD I believe is going to fall because the dollar is going to go bullish. And if you now look at the other one you're not asking, this is my response on that one. So I have a bearish bias ahead right from the beginning of the week on AUD USD. I believe it's going to fall because technically that is what I can see on the daily time frame. Then I now come over to my Forex Factory. Now this is Forex Factory. I believe it should be opening at your end now. And 1:30 a.m. early this morning, the news on CPI was released, and it's a red, actual less than forecast. And let's go back now to MT4. What did you see happen on AED USD? It crashed because I have seen a resistance ahead, price at the resistance. Now, if the news was released when price is touching the resistance, that's perfect. But it's been some days. But then what gave me more assurance is the fact that there's equally a candlestick pattern here, which is a rejection, pattern. It means price could not break above this resistance, and as such, price is expected to fall. And the news, I now waited for the news to come out in line with that analysis. And in such instance, honestly, I didn't wake up in the night to trade this news. I've actually had that trade running before then. But then if you have to trade that news by 1:30, all you need to do is to wait and see the actual figure. And if it is less than the forecast, you trigger a sell immediately and see the crash we have on this instrument from the news. I don't know if this answered the question, sir.
Yes, sir. Yes, sir. Thank you very much, sir. Thank you.
It's just so clear because we have a practical example, to it. So I think I've also answered the person that, somebody was asking about resistance and support. This is how to draw resistance. When you have a level, a resistance level is a level where price has not been able to break. Now we say in a layman's time, resistance is like the ceiling in a house and support is like the floor. So if resistance is a ceiling, every house where you are, there is a ceiling. If there's no ceiling, there will be a decking. One of those things will be there. So it means a level where price cannot break beyond. So when price hits a resistance level, we expect price to fall. And when price hits a support level, we expect it to go in the bullish direction. So when a news is about to be released, what I do, the first thing I do is I go to look at the price on a different currency pairs on that instrument, and I try to identify if they are on a resistance or support level. If it's on a support level, then I'm looking out for a scenario where the actual is greater than the forecast. If it's on the resistance level, I'm looking at where actual is less than forecast so that I can trigger a sell. So that's how we do it. Mr. Lawrence, good question. So what happens when price action?
Okay, my question is, sorry, sir. What is the best time frame to identify support and resistance? Is it on a 1 hour, 4 hours, or a daily time frame to identify your support and resistance?
You can use any one of them, 1 hour, 4 hour, daily, weekly. But when you're doing top-down analysis, which is a multi-time frame analysis, it's always good to first of all look at what is happening on the bigger time frame and now scale down to the lower time frame. So for me, what I do is I look out for the daily and weekly time frame first. If I can find resistance and support, then I can now scale down to the lower time frame. It's better. It's far better that way. Because what you are doing when you're looking at support and resistance on the bigger time frame is that you are looking at the long-term trend. Support and resistance can work on 1 hour, no doubt. But then, 1 hour is not as strong as daily or weekly. And the trend on 1 hour cannot be compared to the trend of daily or weekly time frame. If the weekly time frame is too big for you, no problem. You can stop at the daily. But just make sure you are not looking at one time frame when you're doing your analysis. You can filter your trade better when you have the overview of the daily time frame and the 1 hour time frame together. If price is buying on the daily, then you're looking at making entry on the 1 hour. So that way you are sure that the trend will go in that direction. Most times when you trade just on one time frame, maybe just 1 hour, 15 minutes alone, many times what you're trading is actually a retracement of a bigger time frame. That's why you see that sometimes you enter a trade after like 15 pips, maybe on the buy trade, you just reverse to sell and it cannot sell for 50 pips because that time frame is just capturing a retracement of the long-term direction. So it's always better to have the long-term view so that you are trading, you are making entry on the shorter time frame in line with what is happening on the bigger time frame. I hope that answered the question, sir.
Yes, sir. Thank you very much, sir. Thank you.
Welcome, sir. Okay, Mr. John, I was asking. Sorry, let me just answer this question. Can we use gold to analyze the support and resistance in line with CPI released on USD tomorrow? Yes, you can. you can use gold. But then the other thing you need to note is that in gold, the dollar is a quote currency, not the base currency. So you need to take that into consideration. So if the news comes out in such a way that the actual is greater than the forecast, you are not going to be buying gold, you'll be selling gold. Because the gold, the dollar in the gold is the quote currency, not the base currency. So that should be noted. You can use both to analyze. Okay, somebody was trying to say something. Please go ahead.
Yes, I'm the one. I'm the one.
All right.
Good afternoon, sir.
Good afternoon.
My question is on the stop loss. I don't know. Sometimes you told us that if we are trading, are you hearing me, sir?
I'm with you, man.
Hello. Okay, sir. That if we are taking trade on a swing trade, H4, that we can leave it to run for days if we can endure it. Well, my problem now is, okay, assuming that you're on this swing trade and the profit comes up, is it better you take it or you leave it to run to higher profits, sir?
All right. The thing is that from the onset, even though we say in swing trading, the general understanding is that you are trying to ride a long-term trend, but then you should also have a profit level in mind. And if you don't have a profit level in mind, it's always good to use your Fibonacci tool to know the expected profit level, so that you can set or take profit ahead. So anytime price gets there, the beauty of swing trading is that you don't need to be watching your system all the time. You just set, it's like a set and forget system. And so if you're already putting your take profit level, anytime price gets to that level, it triggers your take profit order and the trade closes. So that is, to run for days does not mean it's just keep running and the trade just keep running without closing. No, put your take profit in place. And peradventure, you want to do a psychological profit taking, because people do that. They don't put the take profit. Maybe you want to be watching it. Maybe when it gets to like 50 pips, then you can close it. So just make sure there's a profit.
Profit what?
I said make sure you have a profit.
You said something.
Yeah.
Okay, sir. Okay, sir. I also wanted to ask that in case it did not enter profit, and it continues running, and maybe the close of the day it has not entered profit, how do you set the stop loss so that maybe when some of them you open maybe on Thursday or Friday, even as at Monday, Tuesday, it has not entered profit. How do you set it so that it will not enter, it will not hit your stop loss? And sometimes in the night, their manipulation, you just see that they will. There's a way they do it, and this thing will. They will. I don't know. They will just come with speed and come and hit the stop loss. How do we set it? So during this period, how high? Is it high to? Is it good to? Because when you say let you set it high, it becomes more than even the profit you are looking for. And if you set it short, it will come and hit it. Yes, sir.
All right, man. Now, please take notes. Swing trading is not for everybody. Yes. I need to emphasize that.
Okay, sir.
It has to do with if your personality can take it. If you know your personality cannot take it, please, if it's day trading you can take, stick with day trading. Now, swing trading is suitable for those who are naturally very patient. They can wait for the markets to evolve. Also, those who don't have the time to be checking their trades very often, so they can do swing. Yes, and the idea behind swing is that you expect the price to go in the same direction for a long period of time. So the take profit is large, and the stop loss also can be a bit wide.
Okay.
A bit wide. Now, I'm going to use what I have on screen now. This is GBP JPY. I will use this as an example. I analyzed this one, I think either this morning or this afternoon. I am seeing a setup on it. I said it's a rising wedge with a head and shoulder pattern.
Yes,
So
sir.
price is now testing the trend line, but I still expect it to fall. So in this particular trade, how do I set my take profit and how do I set my stop loss? For my take profit,
Yes,
I have to use my Fibonacci tool. Now, the Fibonacci tool is a very powerful one. I know somebody was saying in the morning that I should do a video on how to use Fibonacci. I'm going to do that hopefully before the week runs out, or latest by weekend I'll do it. But then I'll just show you how to do it. If you want to use Fibonacci to set profit level in a buy trade, this is what you do. You pick your Fibonacci tool from up there in the blue, where you have my blue pencil up there. Click on the Fibonacci tool there. Now you take it to the most recent low. This is the most recent low in this pattern. This is the most recent high. Those two places are circled. The low, this is the most recent. This is the most recent high.
Okay.
So I'll pick the Fibonacci tool and I will now drag it. I will press my right click on my mouse and use my long finger to drag from the most recent low to the most recent high. Now you can see that the Fibonacci level has been, displayed. Now you have Fibonacci 23.6, 38.2, 50, and so on. And each of those levels can be used as the take profit levels.
Okay.
So generally, Fibonacci 50 and 61.8 are regarded as reversal points, meaning if price sell, just like we are anticipating, most likely it will get to 50 and possibly 61.8, after which it is expected to reverse. Does it mean the price cannot get to 100? In some instances, it may proceed to 100, but we don't know when that, the market does its thing, however it wants to do it. But the guarantee levels are 50 and 61.8. So you can set those two as your take profit level. So maybe you open two trades. So as you are analyzing and you're able to, once price get to the level where you can do your entry, because once price breaks through this current support level, I'll be ready to take a sell. Then once I take the sell, I'll set my take profit, TP1, Fibonacci 50 at 188.235, TP2, Fibonacci 61.8 at 187.543. That's all. I've set my take profit already. So I will just leave the market to do its thing. Whether it takes a day, 2 days, 3 days, or in the case of a swing, it may take a week sometimes, but I anticipate that price will get to that level. So I'll leave it to run and do its thing. Now for stop loss. The stop loss is usually the most, in a sell trade, is usually going to be above the most recent high. You can see where I circled up there. That will be where your stop loss will be. And that's around Fibonacci 0, the most recent high. So if your stop loss is going to be up there, so what do? We can use a vertical line tool. It's always advisable to make it like some 5 pips above that most recent high, just giving room for retracement in price. Now this is GBJPY. We can't use 5 pips or GBJPY. We use like 10 or possibly like 15 pips because it's a very volatile instrument. So just look at some 10 or 15 pips. Okay, this is even 7. Okay, that's about 10 pips. So that's it. So we have our take profit and we have our stop loss. Like I said, if price is able to break out below this current level, anytime we have a new candle with some pips below this support zone, I will trigger my sell. Okay, so if I trigger my sell at where I put the line, line tool, so Fibonacci 50 can hit about 191 pips on this particular instrument. Now take note, this is peculiar to GBJPY because it's volatile. Euro USD will not give you up to this. You understand? So Fibonacci 61.8 can give about 262 pips. So what is the stop loss? Stop loss is 112 pips. Now this is where the question lies. Can you risk 112 pips on a trade?
Yes,
most
that's it.
likely a no, except you have a large account. So what I advise to do in such an instance is that you reduce
Yes.
your lot size so that your risk can be minimal. So let's assume you have
Okay.
a $2,000 account, for instance, and you want to trade this, 112 pips stop loss is large, even for a $2,000 account. But if you
Yes.
reduce the lot size from a 0.1 to possibly 0.05 or 0.03, let's even use 0.03. If you take it to 0.03, you will only be risking like 40 or 30 to $40. So that is reasonable. It will also affect your take profit level. Your take profit, your profits will be lesser. But see, the first thing you are doing is we are trying to manage our risk first, risk before reward. So that way you can set your take profit and stop loss, and you are still, perfectly safe in trading. So I hope that answered the question, man.
Yes, sir. Thank you very much, sir. I'm very
You're
grateful.
welcome. You're welcome. Mr. John Awe, can you practically show us support and resistance for gold? Okay, you've been so particular about gold. Are you on a gold trade, sir? Is Mr. Awe still there? Currently, we don't have any support or resistance in view for gold. But what I have is a trend line, and trend line can also be used to identify there's a measure of support and resistance in trend line, because when price hits a trend line and you expect it to fall, it's as good as it's hitting a resistance level. So that's the only way I can explain. On gold, there's no clear support or resistance or vertical or horizontal line, but we have a trend line, and price is currently testing the trend line. And I still believe there should be a bearish breakout of price with what I'm seeing currently on gold. This is like a triple top pattern, which should still lead to a further breakout in gold, all things being equal. How do I set stop loss and sell limit on the phone? Unfortunately, I can't connect my phone now. Maybe I'll try to make that also into a video and show you. The place where you take your trade on your phone. Let me just go to my MT4. Okay, well, you will see the place market execution. Okay, Mr. Lawrence, I'm trying to attend to too many people. I will attend to you. Just exercise a little patience. So what's your question? What's the question you're asking? What happens when price action isn't either on support or resistance level? There are other things you can look out for, which we mentioned, like candlestick pattern is one of it. You can look for candlestick pattern. Is there a candlestick pattern around price at that time? That can be an indication. So if you have a reversal candlestick pattern in a bullish trend, then you know that price is going to reverse, into a bearish trend. So that is another thing you can use. You can look at chart patterns. Chart patterns can also tell you where the price is going if you don't have support or resistance or candlestick pattern. So those are three things I personally look at. I look at support and resistance. I look at candlestick pattern, chart pattern, or a trend line. Is price trading around a trend line? That can also give you an insight into what is expected to happen. So I hope I finally answered the question. All right. So for the person asking about gold, you can see we have a pattern here, which if everything plays out and this pattern holds, you can see that the candle is already, price is retracing in the bearish direction. We should still expect further bearish breakout on gold. So the person asking about the trade on the phone, you will see market execution around the place where you take your trade. You click on market execution and you see the order pending order listed below the market execution, like your buy limit, sell limit, buy stop, and sell stop. So it's something that's straightforward. You should be able to get it. Akin, how can I set up my MT4 on PC? Okay, we need to guide you through that. That is not what I can do online right now. Maybe after this class, you can chat me up, we'll guide you through on how to do that.
Sorry, sir. I also tried to log into your YouTube for the Learn Forex with Rotimi Olawale, and I could not get it.
Just
I don't
type it in the
know whether
search. Type it in the search box.
Okay.
And if you're finding it difficult, just now look on the screen. I'll type Rotimi Olawale FX. Type at, put the at sign.
Okay, I should put at.
Just try this. If typing Rotimi Learn Forex is not coming up for you, just type at Rotimi Olawale FX. It will still bring up my page.
Okay, let's Learn Forex with Rotimi. Learn Forex at Rotimi Olawale.
Not at, is with.
Oh, at first.
Okay, can just look at your screen now and type.
Okay.
This.
It's not showing on the screen, or the chat is still showing.
Or you can chat me up privately so that we don't take time on that.
Okay. Thank you very much, sir. Thank you.
Now, Mr. Ennis is asking, kindly give a quick recap on the news trading strategy. I've done this before, but I'll oblige you in a minute, and we'll close with that. Ways you can trade. One, you trade in line, you take your trade in line with a directional bias. On the screen here, you can see that price is in an uptrend, meaning you are looking for just a buy trade. You are looking for actual greater than forecast, and you're trading in that direction. If the trend is in a downtrend, then you're looking for a sell trade. And to do that, when the news is released, you are looking for actual less than forecast, and you take a sell trade. So that is one way. And the other time frame we're talking about is probably daily or weekly, not a 4 hour or 1 hour, preferably daily time frame or weekly time frame. And the second one is using support and resistance. Using support and resistance, at a resistance level, we expect the price to sell, meaning if price is at a resistance level, as at the time the news is about to be released, you are looking for sell opportunity. And sell opportunity will come if the news comes out so that the actual is less than forecast. If price is at the support level, you are looking for buy opportunity, and that will come when the actual is greater than forecast. So if the news outcome lines up with a technical bias, you trigger the trade in that direction. Also, you can use the candlestick pattern, possibly of the previous day. So if you have a particular candlestick pattern, either a rejection candle or pin bar or a hammer or doji or any one of those, you can use that to have a bias in mind before the news is released. And if the news is released in that direction, you take the trade also in that in the direction of that candlestick pattern. And the next is that you can trade by looking at multiple time frame and look at what price is doing, the trend on each of those time frame from 1 hour to 4 hour to daily. If the trend is bullish on those time frame, then you are waiting for the 15 minutes to also align to trigger a trade, in the general direction of price. And also, if the news is already in line, the outcome is in line with your initial analysis, then when the news is released, trigger the trade. That's what this one is saying. place instant execution if price is according to your direct bias. Because what happens at that time is that market has given you a confluence. So if you have a bullish outlook before the news is released and actual comes out greater than forecast, then with confidence, take a buy trade. And you do that by placing an instant execution trade. And finally, you can also place a pending order ahead of the news if you have a bias in mind. So if you have a bullish bias, you can place a trade in line by placing a buy stop order, maybe some few minutes before the news is released. And you can also place a buy limit order in case the news comes out, it sells first before going in the buy direction. So that's just a recap of all what we have done this afternoon.
Good evening, sir.
Yes, sir.
Please, is it possible we have a video of this training?
Yes, it's possible.
Okay, sir. We're very glad if you can upload it for us.
All right, sir. All right, so we're going to end the class here. I believe you've learned a thing or two. What is important is that you start implementing this. The next time you see a fundamental event, which is from tomorrow, make sure you just trade in line with what we have taught you, and you see that you become a better and profitable trader. All right, we'll see again some other time. Take care and bye. You're welcome, Madam Anaji.